Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We get the Dow down to 321 points. NASDAQ is off 83. S&Ps are off 38. Gold contract up $8, trading at $1,224 an ounce. Silver up 27 cents at $17.33 an ounce. Platinum down 6 at $1,273 an ounce. Copper up 3 pennies at $3.03 a pound. Light sweet crude, A to B equals C to D. Bingo. We are down 219 at 85.12. We'll go back to that baby, but that baby is down and down. 85 is the first priced target, folks. But you have some juice underneath it, and we'll see whether it wants to extend this route on the way down. Bonds, the 10-year is up 1 tick at 126.13. 30 years up 2 at 140.23. King dollar up 218 ticks at 85.62. You got the euro down 44 at 126, and the yen is off 30 at 107.78. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Oh, baby, deviance is the name of the game out here. Volatility is the name of the game, and get used to it, folks, because this is not going to slow down. And what this is all about substantial change in trend. So, what do we have out here today? Well, let's move back a little, okay? Because, first off, you get an S&P right now at 1932. High generated was 2006. You come straight down. First time down, you hit 1926. 1926 was hit on the 2nd of October. We do a nice bounce. You bounce up to this 1977. Then what you have the last 3 days absolutely send everyone into conniptions. First day, you go down to 1934. Yesterday, you go all the way back up to 1968. Today, you come down to 1927, and we're at 1932, okay? So check this out. If you're a trader, this is going to be heaven. If you're an investor, it's a tough deal. So, if we go over to the SPY, what you're going to see first off out here is this. So yesterday we did 920 million shares. And what you had there is that you had a lower low with higher volume. And that's why it likes to come back down. What we have out here today is a market that's down, and we're going to have lighter volume. Okay, so what does that set up? Guess what? Volatility, baby. It sets up a bounce once again. So what day is it? Where you going, up or down? The SPY. The SPY today, we're at 155 million. We did 186 million yesterday. The benchmark on this baby, meaning where I suspect the bounce is still going to come, and this is where the deviance is, folks, that is really so cool in the marketplace, is that the spike that was up from the 30th, more than likely, my take is that we're still going to get that tested. And that's going to probably be the end of the testing area. The reason I'm saying that is this, is that, let me pull this, something just happened, is that the way this market is reacting, it will wear out the bulls and the bears. And that's just how that's what markets like to do. So, that level on the cash S&P is 1985. And that's a long way from where we are right now. And it almost seems that that can never happen. Well, what you also have here is this. The market is always energy. And that energy has been expanded both up and down. You know, so it's going to be wild just watching this whole thing shake out. Bottom line, this is the beginning, okay, of the volatility that I expect is going to last and last for a long time. The reason being is that if we go over and we take a look at the SPY, the SPY, we brought this up yesterday, and this is really important to wrap your head around. What you have inside the SPY right now is a break of the long-term trend, and this baby is broken with conviction. Now, the break with conviction, folks, is down to 1340. You know, you have the benchmark that's out there at the 1737 level, which is the February 5th level. But longer term, 1340, man, that's a 33, 35% correction coming at us in the marketplace. It's a monster. And if we go over and we go take a look at the XLE, and we just start with ExxonMobil, why? Well, you get the oil and gas sector. What you're going to see is that little baby is pounding with volume right now on the February time frame. The high in ExxonMobil of the week of February 7th, which is the benchmark, is 92.21. Guess what? We're into it with volume today. Exxon's down 285. We're at 91.76. Bottom line, looks like it's going to not only get into the low, looks like it's going to more than likely try to take that low out. Now, what's important here to wrap your head around also is that we get the XLE is down 338. You're at 84.64. Depending on how long you've been trading, the XLE, folks, was the beginning culprit on the way down in 2007. And I remember it well because I had one of my cars I named Doug, D-U-G, okay, from the double pro shares. Bottom line, the XLE is at 84.70. 84.17 is the high. The volume characteristic is out of sight. And what I mean by out of sight, this is what you have. The February 5th time frame is 98 million shares on a weekly basis. We've already done 104 million shares. We got another day left. This thing's going to basically take it apart in spades. Inside of that, you got Schlumberger down 340. You got Oxy off 290. Apache's off 620. Halliburton's down 3. I mean, it's just all over the place. And if we go into that oil contract and we go take a look at oil, what you have with oil is this. Oil is at 85.32. We've done 239,000 contracts. So the initial A to B equals C to D is there. Let me just see how this one works out. So if I do 104 to 89, is it 104? 104 to 89. It's 15 bucks. So we get another. Yeah, guess what? 80 bucks. We can go to 80 right now too. And I expect more than likely that's exactly what you're going to see. Gasoline, this is a beautiful thing, folks. Check it out. Gasoline right now, unleaded wholesale gas is at 226, and this baby's getting taken to the cleaners too. This is going to go to 220. Oh my God, hold on, it's already at 226. At 226, that's going to put gas under $3 just about everywhere. So 284. Let's see this. 284. 246. That's 40 cents. 210. No, 215. Okay, so we're at 225. 215 is A to B equals C to D, and it did break the B point with volume. You know, and they're all over the place. Gold. Let's go to gold. Okay, so what do we have with gold? Gold had tested the lows, rejected the lows, came off the lows with a vengeance. Today we're at 12.25, up 19 bucks. That gold's going to start trying to make its way back inside the 12.22. The way that gold traded yesterday and today, by the way, is saying that trend-wise we're going to 12.92. 12.92 is wide open for that gold contract. We go over to the dollar. That correlation is right there, no doubt. What you have with the dollar index is this, DXZ4. If you remember, the dollar, that is a classic railroad track. And what happens with a railroad track is this, and this is what's really going to be cool, folks, is that the dollar was down to 85 today, rejected lower price, has 54,000 contracts. The correlation, the way that this railroad track works is that you'd get up somewhere into, it's a lot further up too. Let me just get this. You'd get up to at least 86.21. You do it with lighter volume, that's the sell. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials down 309. NASDAQ off 78. S&P's off 36. We're going to be right back.